In this video, we're going to go through the current sentiment on Twitter/X. To do this by yourself would take you hours. I'm going to take you through it all in just minutes. But more importantly, give you a concept of what it all means for you. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. When you look at Twitter or any news site, you're going to get two basic camps of people. One camp, everything is roses. The other camp, everything is disaster. Rarely, you'll get people that sit in the middle. And when we look at the GMI, Total Liquidity Index in billions, it's giving us a sense that liquidity is set to come into the market and support Bitcoin's price going up. When people look through social media, what they're basically trying to do is to just justify their position. Is it good to be in? Is it bad to be in? Well, that's one way of looking at it, but you can actually bypass all those emotions and just make your own decisions from structural levels, which is a really good idea. But what are we seeing with the stablecoin supply oscillator, the ratio, the SSR? It's getting into a level where there's so much cash piled up to the side, we could have explosive growth. And this is something to just keep in mind. We've found the SSR to be quite good throughout all of the years that we've been doing this. If you love on-chain data, you're going to love what the CCD has been saying, coin days destroyed. It's basically saying we're not anywhere near a peak of coin days destroyed. That means that we're just around getting going. Typically, you need one of these peaks to come down. We're not seeing a peak just yet, just the opposite. This is a really interesting analysis floating around on X at the current time. You can see that we are here and the American elections are just around the corner, and then things tend to hot up. Will we repeat past price action? Please let me know what your thoughts are in the comments. Inside the masterclass, we have a rule, Rule 238, have no story. We just don't engage in either positive or negative news. And when we analyze charts, we make sure that we look at statistically significant, equal emotional to price stake comparisons. In this chart that's been floating around on X, it assumes we're going to go up, but there could be a nasty surprise. Of course, this nasty surprise was the entire world shutting down. If we're going to get that again, yes, we could get something like that, but unlikely that this will happen in this way. Other charts that have been floating around are congratulations for making it through the bear market. Basically what people are saying here, you're worrying about price here, you came all through this, you're a legend. And if you did make it through that, please put a comment, legend, or something about that, because you are definitely one. August and September, from a seasonality stance, tend to be pretty negative, and that tends to flow into the stock market as well. Well, it comes from the stock market and flows into crypto, more the point. And you can see what's being just pointed out here. Yeah, we're going through this, but guess what? 2 red months, that doesn't really fit, but we're going to have positive. What about this one? 2 red months? It's not quite the way, but we're going to have positive. Please have no story. If you're looking at structural levels, you're going to win. Of course, we want it to go up, but if you only prepare for one case, in other words, the next 3 months are positive, what happens if one of them is negative? You will be caught completely off guard. Other charts that are floating around, the 2017 fractal, hey, look at September, yeah, we went down, but we went up. What about this one from 2020? Yeah, we went down, but we went up. What about this one from 2024? Of course, we're going to go up. There's no other comparison that could possibly be made. This chart is really interesting. What are we seeing here? Resistance, support, 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 support. Resistance, support, support. It's going to 100K. Absolutely guaranteed. But it could come down first before rallying in. This chart is looking pretty good as well. Look at this, 20K, 69K. Well, kind of nearly made it. 220K. Very nice. And you can see here that this one doesn't go down at all. It just goes straight up. Oh, and this looks pretty interesting. We're getting our first 100, 200 week golden cross. Just a thing to note. Golden crosses are typically associated with price coming down, not going up. And death crosses, which are the inverse to this, are typically associated with price going down. So you just need to be a little bit careful. In fact, there was a death cross, and what happened? Well, price just soared. So much for the death cross. What do you think might happen with this potential golden cross here? Please let me know in the comments. Other posts that are circulating around a bullish reversal. Oh, that looks pretty neat. Positive. This is looking pretty cool as well. A cup and handle pattern. Just drawing an equidistant line from there up to there would put us around the 250,000 mark. Not bad at all. And we're seeing currently this particular thing floating around, this chart floating around, all of these lower lows here and a boundary in play. Well, what do we expect? It's got to go up. But of course, if it comes down, we would be prepared for that as a community as well. And what is the analysis of this particular chart just floating around X at the current time? Well, what's this show? Well, it was blue, then it went into green. What does this one show? It was blue, very close to that bottom line, and it went nuts. What about this? It was really blue, and it went really nuts. And what about here? Well, it's getting really blue. It's obviously got to go nuts. Just when you thought it was safe, this naughty person puts out this, the Wall Street cheat sheet, psychology of a market cycle. Oh no, this is no good. This is just completely in opposition to all of those other posts. But that's okay. Everything is darkness and it's light as well. When we look at Bitcoin's average returns by month from 2010 to 2024, you can see typically August takes a hit and September is even worse. But look at all this great, fantastic news that supports that global liquidity index and some of the projections that were put forward. This is an increase into October, into November, and into December. But just remember, this is average. In statistics, if you put one arm in the fire and one arm in the freezer, guess what? Your average temperature. The super trend is not looking too super at the current time. It's just turned red. Last time it did that, we had negative price momentum. Will it turn back to green? Or will it stay red? What do you think? Let me know in the comments. If you're making your buying and selling decisions based on posts like this, please think again. It's not to say the posts aren't good. They're all good. Any degree of knowledge is fantastic to have, but you must understand the structure of the Tier 1, Tier 2, and Tier 3 charts. Let's have a look at this one. Bitcoin realized price to liveliness ratio. What is it basically saying? It's saying that we're just about to break through this level. When we break through that level, what happens? We typically go down and visit the lower level, the realized price. Now, if that is the case, are we expecting to come down to around 31,500? Please let me know what you think in the comments. The entire world is getting on the Bitcoin and crypto track, and Bitcoin, around the $1 trillion mark, is just a fraction of gold and art and stocks at 110 trillion. The fiat market, global debt, and real estate. Now, what does this tell us? We're just getting started. In fact, Michael Saylor, the Bitcoin Maxi of Bitcoin Maxis, said, what is going to happen? Bitcoin will become 7% of all the capital in the world and hurtle towards $13 million. And of course, hurtling towards 13 million is certainly going to hurt Peter Schiff, who loves gold. Don't forget that the CPI month-on-month core and main comes out and the CPI year-on-year. The markets could get pretty volatile. Core CPI is anticipated to hit and headline CPI is anticipated to be lower. But if you look at what the previous month was, they're both up. Also, be aware that there's typically a release of the news causing spikes, just crazy spikes, before reports. So this is something that could bring a lot of volatility into the market. You can see that there are as many stories out there for the market going up as for the market going down. When you look at financial markets, they're always in a state of flux. They're always going up and down. Even in an uptrend, we can get 30 or 40% retracements. Please be aware of that inside crypto. And when we're in a downtrend, we can get very substantial uptrends as well. So what you really need to do is to look at the structural level and be independent from the news. I know a lot of people don't like this. It feels unnatural. However, if you make your buying and selling decisions based on the news, you would have, if you were in Bitcoin from the start, you would have sold Bitcoin 415 times plus already. The best thing to do is just to have no story at all. Understand that the markets are going up and the markets are going down. If you have a process and a strategy to take advantage of the up moves and also the down moves, it doesn't matter if the up move is in a downtrend or the up move is in an uptrend. You can take advantage of it. Even uptrends in consolidation, you could take advantage of those too. That's the real key and secret of consistent profitability. Unfortunately, what tends to happen as price comes down, people just go nuts and sell everything. Unfortunately, the majority of investors and traders get their advice from RORD. What is RORD? Run on red days. That's the petrified chicken. If you're running on red days, you absolutely stop yourself from being consistently profitable. And if you follow the news, even religiously, you're doing the same thing. This is why so many people can't figure out, they're very intelligent people, but they can't figure out why they're not consistently profitable. Being inside financial markets takes a lot of strength, and it does take a lot of strength to apply Rule 621, which is BORSOG. There's BORSOG. What is BORSOG? It's buy on red. That's the BOR. And what is SOG? It's sell on green. That's how you make consistent profits. It's important to be kind to yourself. If you identify with RORD, you know that running on a red day is programmed into you by those pesky institutions. But I would suggest you burn this chicken into your mind and just say no more running on red days. I would like to thank Joe very much for his kind generosity in offering a CTKS Partial Masterclass Scholarship, and to Lorenzo, well done my friend on being the awardee. Unfortunately, many people just missed out on that particular scholarship, but Shah and Al have very kindly offered a Partial Masterclass Scholarship as well. Your name could be here. Just fill out the form and it's in the description of this video. And just a quick update, the video for the service was released yesterday. Always remember Rule 1, only knowledge creates profit. I'm going to give you an alternate way to look at the charts that will be a game changer for you. And if you're new to our community, a very warm welcome. Many people look at charts like this and seek to understand where they could be going. There's a very specific science that you can apply through Level 1 and Level 2 standard certification. I'm going to pop on this indicator, which reveals structural levels that analyze all of price history. In Bitcoin's case, more than 5,200 days worth. This specific method creates the world's most statistically significant buy and sell levels. That just means you know where smart money is buying and selling. I'll just prove it out to you. When I look at this chart, I don't see this. I see something completely different. I'll show you what I see, and then I'll explain it to you. This is what I see, and I'll be bringing out a course for all the students that have already gone through the masterclass or Level 1 and Level 2 standard certification or are inside the service. You'll get it completely free of charge. This looks like a bit of a mess, but when you understand it, it's not so much of a mess. The first thing to understand are fair value gaps and positive and negative air gaps as well. When you look at price, say it's here, this is a negative fair value gap or negative fresh air gap from the 57,400 mark down to 56,550. But when things reverse, we actually get a positive fair value gap or positive fresh air gap as well. And you can see all of these levels have different air gaps in them, or fair value gaps as they're called in ICT. Knowing where they are is vitally important. Unfortunately, in ICT, you can only tell a fair value gap after it has occurred. With the CTKS method, you can tell where they are before they occur. Therefore, when you have structure on, you can tell where the structural levels are and where the fair value gaps are, both positive and negative, throughout all of price structure. But there's a lot more to this methodology than just initially meets the eye. You can see here as we rallied up to the 57,400 level. You can get two types of failures: a structural failure which occurs at a structural level, or an internal structural failure which occurs between structural levels. Both are really important, but the structural failures at structural levels are far, far more important. What directly happens when we get a structural failure? We create an NSA. Not the spy agency, but a negative structural attraction. And what does that mean? If we can't pass the 57,400, we're getting pulled back to the 56,505 level or the 56,550 level. Having an understanding, if you're not going above, you're going below. I talk about it all the time on the daily channel. And you'll notice that we came down and structurally filled that fair value gap. We got a structural pass right here at 56,550. We had a higher high than all of this, and then an internal structural pass as well. We did come down, but it was also an internal structural pass because we didn't dip back into structure. Then we made a series of higher lows challenging this particular 57,400 mark. When you get these internal structural passes in terms of higher highs and higher lows, it's very, very powerful. But when you get a structural pass and a positive air gap or a positive fair value gap, it's coming up because it's structurally attracted. It has positive structural attraction to the level above. And again, I've talked about these things so many times on the channel, but I hope putting these terminology points around it really helps you out. Now you can see this structural failure at that 57,911 mark. Now why is it a structural failure? Because it didn't manage to get above that structural resistance level. With a failure, we have negative structural attraction back to this 57,400 level. You can see it was a structural pass because it actually tapped into that structure. If it's got a structural pass, it has positive structural attraction right back to the same resistance level. We tried to get above it, we tried to retest, and it failed, which created immediately on this particular candle a negative structural attraction back to the 57,400. We tried to waver around, we nearly got up to a structural failure, but unfortunately, we failed, and that brought into account the NSA at 57,400. We had an internal structural failure which almost sort of put the nail in the coffin of the 57,400 level and opened up the lower levels of 56,550. As soon as we encounter a negative fair value gap or a negative air gap, things can move down very, very quickly. It's very important to know how price reacts around structure. You can see if it doesn't hold structure, it's literally coming down, gravitationally attracted to the structural level below. Knowing how passes and fails work is incredibly important. This SP was just done when we were up here. You can see it actually came through, and this is looking a little bit weak. This particular level may actually fail. and because we have an internal structural failure right here. It's not looking good for this particular 56,505 level. It's more likely that we come down to the 56,033, but the key is watching that particular level. We do have a positive air gap here, and we've got positive structural attraction back to the 57,400 mark if we can start to get above that lower high. There's a lot of science involved with the CTKS method, but the fundamental thing, if it's not going above, it's going below. If it does get above, it's going to the next structural level. You can kind of summarize it like that, but you can see there's a lot more to it. The course Profiting from CTKS Method Structure will be available from the 9th of October on ctksmethod.org. It will be absolutely 100% free if you've done the masterclass inside the service or have done level 1 and preferably, of course, level 2 standard certification. But if you've only done level 1, that's okay. You can get it for free as well. If you would like a partial masterclass scholarship into the CTKS Masterclass, and Shah and Al have very kindly offered a partial masterclass scholarship, so you could be part of that. You can see that form link, and it's also in the description of this video. Please feel free to apply if you think it will help you out. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.